You've probably heard the stories. Someone invests just a few $100s in a random crypto and ends up making life-changing money. But let's be real. By the time you hear about those 100 times coins, the big profits are already gone. So how do they find these 100 times cryptos before everyone else? Don't worry, in this video I will break it all down. I am going to tell you all the real strategies used by crypto pros, fund managers, and early insiders. You'll learn what they look for, how they spot winning coins early, and how you can do it too. Make sure you hit the like button and subscribe to our channel for more updates. Let's dive in. Understanding a 100 times coin. First, let's clear up a major misconception. A 100 times coin doesn't just mean a cheap token or a random low cap on some shady exchange. It's not just about low price, it's about potential. Real 100 times tokens share some common DNA. They solve a real problem. They're not memes with no utility. They make things faster, cheaper, or smarter. Whether it's depin like Helium or scaling like Polygon before it was famous, these coins provided real value when few were watching. They also have what's called asymmetry. You're not betting everything on perfection. You're betting on potential with limited risk. Maybe it goes to zero, but maybe it changes your life. And here's the most underrated trait: signals of compound traction. You might not hear the name every day, but under the radar, the devs are coding, the volume is climbing, and the early community is showing signs of life. These quiet signals matter more than hype. You don't need dozens of winners, you need one. One coin explodes while everyone else is still sleeping on it. But spotting that coin means doing what most won't. How the smart money gets in first. There's a reason why venture capitalists and crypto insiders often get rich during every bull run. They know where to look. They don't chase trending hashtags or wait for TikTok to say, buy. They use data, tools, and patterns. One of the biggest secrets? They track wallets. The blockchain is public, and that's a gift. Tools like Arkham Intelligence, Nansen, and even Etherscan let you see what high-performing wallets are buying. If multiple big players are slowly buying a low-cap token over days or weeks, that's a clue. It doesn't guarantee anything, but it's worth digging deeper. Then there's early-stage investment activity. Big venture firms like a 16Z, Multicoin, or Animoca don't wait around for coins to pump. They create the pump by backing solid projects early and supporting their growth. If you can find which projects got early VC support before listing on big exchanges, you're ahead of 95% of the market. Sites like CryptoRank or Crunchbase are gold mines for this. Another huge signal? Development activity. If a coin's GitHub is silent, the dev team's probably ghosted. But if you see consistent commits, frequent updates, or discussion from the team, despite little noise from the community, that's often a very bullish sign. Quiet builds often lead to loud launches. Where to find these coins? Finding early-stage coins isn't about following Twitter trends or Reddit hype. It's about looking in the right corners of the crypto world, where new projects are born and grow in silence. Launchpads are one great place to start. Sites like Polkastarter, DAOmaker, and TrustSwap are where many projects debut. But here's the twist. You don't always want to buy at launch. Launches come with hype, which means inflated prices. Instead, watch for the first dip, when the buzz dies and the weak hands sell. That's often when insiders start loading up. Mid-tier exchanges like Gate.io, MEXC, and KuCoin are also worth watching. While Binance lists only established names, these smaller platforms often host hidden gems first. You'll have to be more cautious here, since the failure rate is high. But with proper research, you can catch big winners before they hit the majors. And don't forget Layer 2 ecosystems. Platforms like Arbitrum, Base, and Optimism are buzzing with early innovation. Go to DeFi Llama or L2Beat, dive into what's trending on these chains, and look for low-user apps with growing daily volume. If you see a project with under 10,000 users but rising numbers, that's early momentum. That's your window. The problem-solution filter. Every time you look at a new token, stop and ask yourself, what is this solving? That single question will filter out 90% of the noise. If a coin doesn't solve a real problem or make something significantly better, it's probably a pump and dump. Does the token fix a pain point in crypto or real life? Is it cheaper, faster, easier to use? Does it tap into a rising trend like AI, DPIN, or real-world assets? Take Render, RNDR, for example. It didn't just ride hype. It offered decentralized GPU power for AI rendering, a real, valuable need. That's why it pumped. Not because of memes, but because of their usefulness. So if the project doesn't have a working product, or even a clear mission, after months of hype, it's a red flag. You want tokens that are already doing something, even if it's in beta. Red flags that most people ignore. Sometimes avoiding disaster is just as powerful as spotting a winner. Many people lose money not because they didn't pick the next gem, but because they got trapped in a ticking time bomb. One of the biggest traps is token unlocks. Many projects distribute early tokens to private investors on a vesting schedule. When these tokens unlock, they often flood the market and prices crash. Use a tool like token unlocks to track when this happens. If a major unlock is coming, you might want to wait. Fake communities are another trap. A Twitter account with 100,000 followers but zero engagement is probably botted. Look at the quality of interaction, not the quantity. Real followers comment, retweet, and ask questions. If it looks dead, it is dead. And beware of anonymous teams. If the team isn't doxed and they aren't already known in the space, it's a huge risk. Sure, Satoshi was anonymous, but that's the exception, not the rule. If something goes wrong, you want accountability. Lastly, if a coin has been hyping for more than 6 months with no MVP, no beta, and no product roadmap, walk away. That's probably vaporware designed to milk hype and disappear. Build a repeatable system. If you want to stop guessing and start winning, you need a system. It doesn't need to be fancy, just something you can use every time you look at a coin. Start by looking for coins with a market cap under $30 million. These are small enough to still 100 times, but not so tiny that they're total vapor. Check for daily volume. If it's under $300,000, it might be too illiquid. Above that, you have some breathing room to enter and exit without getting stuck. Make sure the devs are active. Even just 1 or 2 commits in the last month is a good sign. Then look at the community. Is it small but active? Are people excited, helpful, and engaging, even without marketing? And of course, the use case has to be real. It doesn't need to be perfect, just real. If 4 out of 5 of these things check out, you might be looking at something special. The 3-step research method. Over time, you'll develop your process. But here's a simple one that works well, even for beginners. Start on Twitter. Use advanced search to look for low-key mentions of the project. Try phrases and filter by latest. This will show you what insiders and early users are talking about. Next, explore the ecosystem. Use sites like DeFi Llama or Token Terminal to see which protocols are launching or growing on chains like Base, Solana, or Arbitrum. If a project has rising total value locked, TVL, but barely any users, that's often the calm before the storm. Lastly, set alerts. Tools like Dex Tools or Gecko Terminal let you track volume and wallet activity. If you see a sudden spike in new wallets or liquidity, that's usually a sign that something is about to move. So now that you've seen the real strategies, what's the first step you'll take to find your 100 times coin? Let me know in the comments. Hit the like button and subscribe to our channel for more updates. Thanks for watching.